The pain trade is coming. I'm your host, Steve Van Metre, and thanks for joining me today. And Goldman Sachs is warning investors that the biggest fear in the market right now is missing out. And when you see how the machines are positioned, well, it'll make perfect sense. Let's first head over to the Goldman Tactical Flow of Funds report, and then we'll get into the technicals and momentum of the market. And what they note is even though a lot of people have been running to cash, that following the 10 worst years for the 60-40 portfolio, the median return for the next year is up a whopping 17% with a 90% hit rate. But now I want you to see how the machines are positioned, because what they're saying is the pain trade is higher starting next week. And why is that painful? Because a lot of people have gone to cash. Here we can see systematic releveraging is very large and vol dampening. Again, when buying comes into the market, it suppresses volatility. They have 40 billion of demand over the next week, assuming a flat tape. Now, a flat tape is when stocks just go sideways. Also 10 billion to demand in a potential down big tape. So even if stocks sell off, the machines aren't dumping. Upside for the next 1 month is also large at a whopping 59 billion of demand in a flat tape, and reduced volatility, as we'll look at in a moment, will bring additional demand from vol control and risk parity strategies. Another benefit you'll see to the market is coming pretty soon on January 27th. The peak corporate buyback blackout window ends. Goldman estimates another 4 billion a day of buying comes back to the market. And something we've been talking about is cash positioning. Well, mutual funds are sitting on a massive cash position, so big it's 235 billion, the absolute largest in history. And what I want you to understand is these managers are paid to perform, and if they don't, people will leave. So if the market starts to move higher, they are forced to play chase. They will have no choice, because if one of their peers plays chase and their returns are better, well, you can tell what will happen to the underperforming manager. In this case, what you're going to see is mutual funds play to the upside. We've also got volatility control strategies, something I talk about on Twitter from time to time. And when you see volatility get suppressed, well, what it means is these strategies have to buy equities. And here we can see the VIX was down 10% yesterday, the lowest level since April. The VIX closes at the lowest level since April 5th. These strategies, here you see it, have room to relever. And what that means is buy stocks. So now let's get into the machine positioning. We've got Metre, we've got TD Securities, and then we'll get into, of course, our normal screens that we look at on Sunday. But of course, this holiday edition puts us on Monday. What do we note from Metre? You can see green here. What does it mean? They're maxed out now to the long side, as their fast moving algorithms are looking to take the market higher. And what does Metre note? That if you see on this chart that CTA models have a lot more upside before they're even close to kind of max positioning. This isn't necessarily representative of just Metre, but of course the entire CTA space. And of course, we then look at TD Securities, and what do we see? They're still net short. And again, we've noted Goldman said here, look, in a flat tape, we see buying, because why is that? These systematic machines have to follow the trend higher. That's what they're designed to do. Of course, we know the last time we did the chart show that the S&P failed its 200-day moving average, and I was saying that, look, if this thing gets back over it, you want to start taking positions. Well, here we can see from the previous show, over 39.50 to buy in the S&P, it hit that, and now what are we talking about? Machines buying under 3,700 to sell. Obviously, that didn't happen. So let's take a look at the S&P 500. We'll use ETF symbol SPY. We know momentum positive. RSI is at 60. We want to see it above 40. That's a good sign. MACD now positive cross. Momentum Timer Pro, 5 consecutive daily buy signals. If you're looking to get it on that or CTA-Timer Pro, there are links in the description below. I have noted no position, but I'm adding this now. A hold over the 200-day moving average should be bought. What I mean, maybe give it a couple days or whatever number you need to see. Close over 200-day, look to buy. Let's look at how the machines are going to be positioning next week. You see all that cash, 235 billion in mutual fund managers. At some point, they come back in. So you see the close hold over 200-day. And we have one now Give it a couple more and add positions. Next upside, 407, downside 386. Here we can see Momentum Timer Pro kept the 3-month and 6-month windows positive, or you may even want to wait till you see the 1-month window if you're a subscriber move to a sell minimum. And again, keep in mind there's a special coupon half off right now and a 30-day money back guarantee. And then we note CTA-Timer Pro that's still $20 but going to $30 tomorrow. That's right, on Tuesday I'm raising the price. I said we're going to do this, and what have I told you? This thing was going to give you an idea of how the machines are positioned. Here you can see on the short signal, or the faster signal I should say, they went 100% long, kind of matching what Metre did. On the long signal, they've got room to run, and again, that's exactly what we see from the Goldman reports. Now let's take a look at the charts here. What do we see with the SPY? You've got this massive volume profile. We're on the 1-year chart. Let's zoom in a little bit and see on the 6-month chart. Again, nice volume profile here. Close above the 200-day. You can see some downside pull back here around this a little bit here, but if you see some successive closes up here on the 200-day, look for money and machines to pour in. You've got some upside into the next supply zone. That's up here at 414. It'll run into a little resistance before that, and you see a breakout of this 414, and now you're talking, a shot back at all-time highs. So you've got room to get into this trend, and I just want you to see the trend is higher here, and that's why the machines are likely to chase it up. Let's take a look at the QQQ. Of course, tech stocks lagging behind, maybe the bigger opportunity if you're looking for one. Momentum is positive. RSI, nice number of 58. We got a positive cross on the MACD. Momentum Timer Pro, 4 consecutive daily buy signals. And I'm going to note here, no position, but look for the sell mid. That's on the 1 month to flip to a sell minimum. Again, on the 1 month, we note that the 3-month and 6-month windows remain positive. We can see the machine positioning 55% long and buying as of Friday on the faster signal, but look at this, they're starting to buy on the longer term signal. I want you to see how you compare the CTA-Timer Pro report with your current signals to give you an idea how the machines are positioned. Upside target 292, downside 270. Let's take a look at the charts and see what we've got going on here. All right, upside target 270, that's right into this prior supply zone. We've noticed sellers there. We have a downside trending 200-day moving average, which will act as resistance. You get above that, and you want to see a move up to this 1-year supply, or we're on 2-year chart, up here around 317. But you've got a 1 bottom, 2 bottom, 3, maybe 4 if you want to count that, or just 3. Again, you've seen buying here, and the machines are going to slowly play catch up into this. But look at this on the 6-month window. What do we see? Some downside here potential into this heavy volume profile. Upside is again right up to this higher number right in here to 290, and so that is what you're looking for as a move and for tech stocks to go up. All right, let's talk about bonds, because we know here Nomura says they are short and looking to add or cover those short positions. Since they cover TD Securities also short. And what do we note here? I've said 3.4% is still the magic number. It still is the magic number. How about we take a look at TLT here? And what do we note? Momentum is positive. The RSI is at 58. MACD's got a positive cross. 5 consecutive daily buy signals on Momentum Timer Pro. It's holding no position. I just say wait till the 1 month flips to buy minimum, and the 3 month is still at a buy minimum or higher. So that part is good. And then you've got a green signal on this one. Friday's close at 106. Upside target's 109. You break this, and if you're not getting long, or at least looking at getting long, you ought to. And here we note that you might say, well, wait a minute, why is CTA-Timer Pro showing 100% long on the fast and 100% long on the slow version? It's because my report's historically weighted. So I went back, took the signals, weighted them historically, and said, look, this is how the machines should be positioned. And I kind of also developed the idea that it would be a kind of faster version of them to tell you, hey, look, their odds of short covering or going long are high. You want to get in this. When we talk about gold here in a little bit, you'll know that the CTA-Timer Pro report's been saying, be long gold, be long gold, be long gold. Same thing here you're seeing with bonds is saying, look, before the other signals hit, we're already telling you, historically, this is where you want to be. All right, let's take a look at the charts now, if I can get back over to them. And here we go, the chart of TLT. And what do we see? Beautiful 6-month volume profile right at the 100-day moving average in blue. Notably, that is your level of support. You've got to break this 109.35 level. The 200-day moving average, a little bit of resistance expected. It may not hold, may blast through, but again, notably, the machines should be covering their shorts and pushing bond prices higher, facing a potential everything rally. Wouldn't surprise me if the 200 days a bit of resistance before it pulls back. But either way, you should be putting this hot on your radar of what you can expect to go higher. Let's talk about gold here, because I mentioned the machines would start to buy. Now we're seeing that. We've only got data from TD Securities this week. They're starting to add, and there's room to run. Here's what we noted the last time we did a show, and I left this alone, 1850 before the next round of short covering. It hit that. Now they're starting to flip to long and look for buying. This was the last time we did the show on Monday. But again, I just wanted to show you the value of CTA-Timer Pro report. Again, telling us for a while that you should be long this. And then you see Momentum Timer Pro start to play along that and validate it. And of course, going back to November 30th, we said, look, you should be buying this at open at 163.69. Here's Friday's close, 178.83, 47 consecutive days of signals. The MACD, I believe I should say positive cross. These shows do sometimes I miss something. And let's see, yes, we do have a positive cross on that. We do have potential oversold conditions. So we could see a pullback here. But one thing I want to caution you is the machines are looking to add to these positions. They are trend following. And look at this beautiful 2-year mark volume profile. How about the 1 year? You see a beautiful 1 year of that below. So you could see a pullback here, or we might see the machines continue to add to their positions and take this higher. Let's take a look at gold futures again. Where is this likely to go? At this point, you can easily make the case if the machines pick up into their long positions, you could be looking at 2,000 an ounce or more. So that's pretty cool to see that. Now, one thing I also want to talk about is it going a little longer here is the dollar, because it plays into the whole narrative of gold going higher, bonds going higher, stocks going higher. And what do we see in the dollar position out of Nomura? Well, we're seeing pairs against the dollar start to gain steam as the dollar weakens. We're seeing that dollar positions in terms of the CTAs have a lot of room to run down to the short side. So that means the dollar could go lower as the trend of the dollar heads down. How about we look at TD Securities? Same thing. We could see a lot of short covering on currencies against the dollar. And what do we know? Momentum is negative. RSI is at 34. MACD's got a negative cross. Momentum Timer Pro 5 consecutive sell signals. Of course, we told you no position here. Upside target is just a bit above at 27.94, downside at 27.25. And look at this, we've kind of said here, look, 3-month window sell max, 6-month window sell minimum, the 1-month window sell mid. CTA-Timer Pro looking at the historical weighting says, look, you probably if you're in this, you should have been out of it. If you like shorting things, you could do that, or be long a pair of currency against it, or an ETF. Let's take a look at UUP and look at this volume profile on the 1-year chart. You can see all that selling right there. Let's look at the 2-year, see where the sellers are at, all right there. All these people that bought here are now looking to get out. They're afraid of the dollar going lower. Here you can see the 6-month window. So where is major support and the dollar? Well, it's way down here. You got a little bit of support here at 27.24. You got some more at 26.80. And of course, if we looked at the big dollar here, DXY, you're talking move, break through this downside at 101.70, and their next move is 100. Your bigger support is way down here at 98, and of course that could be your catalyst that we've been talking about for this everything rally. So now you can see the fear of missing out. It's all about machines. They take trends higher than people think, and they can take them longer. So with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.